Right, it's the paper 2 preview for 2025 Edexcel A-level. So this paper covers themes 2 and 3. So let's go through a bit of an introduction, and then we'll talk about what kind of things you might expect to see on this exam. So we're going to look at paper 2 basics. We're going to look at question structure, tips for success. We're looking at different topics from previous years and some key links between themes 2 and 3. There's loads of links between these two. It makes perfect sense that these two would be put together. So we're going to go through all of those in this video. So paper 2 basics, we are looking at a 2-hour paper, 100 marks, 50 marks a section. So you want to be aiming to do one section an hour. You want to do 1 mark a minute with maybe 10 minutes spare each half. Probably won't be spare, but that's obviously the ideal. Read the questions, annotate the case study. I would do that at the beginning because that way it makes life much easier later on. So ideally, if that first sort of up to 10 minutes, ideally you want to do it as quick as you can, spent on your case study, then you can go 4 marker, 4 marker, 4 minutes each, 10 marker in 10 minutes, 12 marker in 12 minutes, and then you've got 20 minutes at the end of that first hour to do your 20 marker. It's really important you get your timing right, and so I can't specify enough how important that is. In terms of the structure, I've got a few different points of emphasis for this. So 4 mark questions, you've got 3 different types. You've got explain questions, which need 2 beats of the case study, but point effect apply. Constructors draw the graph. You won't get one of them on paper 2 because that would be mainly for our supply and demand and our market maps. That's theme 1. Calculate questions though, show your work and be clear on the units in your answer. Figure out what it's asking for. Is it asking for the difference between? Is it asking for percentage change? Especially on calculations. There's a whole set of calculation videos out there to have a look at, so you'll see loads of examples of that. And write your formula out. That way, even if you do misunderstand the question, you'll still get a formula mark as long as it's correct. For our 10 and 12 markers, optional definition, quite helpful to get you kind of on the right sort of track from the very beginning. Then a peach paragraph which needs balance, and an A-gym conclusion. Peach, point, effect, apply, circumstance, or consequence, however. Look at the question wording. Use the words of the question in your first sentence in each paragraph. Use it if it's impact. Do positive impact, however, negative impact, conclusion. And then say whether you think it's positive or negative. If it's important, say it's important or not important. Use the word in your question. And don't forget your conclusions. You can't get good evaluation marks with that one. So don't forget that under any circumstances. For your 20 marker, read the question carefully. We've got 2 options here. We want a peach for and against option 1, the against being the however. Then you want the same for option 2, and then your A-gym conclusion. Read the questions carefully. These 20 markers quite often have a focus, like increase market share or increase profitability. Make sure you link to that, and at every possible opportunity, really, but especially in your kind of first paragraph at the end, maybe link it back at the end of that paragraph and in your conclusion. And then make sure it's balanced, right? Your however shouldn't just be the 4 point for the other option. It needs to be the negative to that option. So make sure you've got balance within your structure. Now, we've also got MOPs here. So MOPs is kind of something you can use throughout your answers. So market objectives, product, service, and situation. So the market is about the competitors. Is the market growing? Is it shrinking? You know, who are the big competitors in that market? What's their market share like? What's the objective of the business? What's it setting out to achieve? Does it have a high quality or low cost product or service? Is it mass? Is it niche? Is there anything we know that might help us answer these questions? And is there anything significant situation-wise that's happening? Have they had cash problems? Have they had new leadership or anything like that? In your conclusion, you want to make sure you follow that A-gym structure. Answer, justify. Those are the essentials. You have to do those. It depends on, it's brilliant if you can add one of these in. Most important is definitely the extension side of things. That's where you consider your MOPs side of things, but you might do that in your justify as well. It depends on, it depends on the price elasticity of the product. It depends on, a whole range of different factors. If you can't think of one, have a look at the negative that you mentioned, and can you mitigate that by saying, well, it depends. If your negative is that there's a lot of costs, can you say it depends on whether you can cover those costs with the excess revenue from this project, or whatever. It depends on what the question is really, but try and bring one of those in if you can. The keys to success. This is the task that you've got in front of you. Get your timing right. Use your application throughout the whole kind of exam. You've got 2 case studies. You've got to make sure you use them. There's a case study in every single question. Make sure you know your structures, which we've obviously just gone through, and make sure you know your key terms. If you get a question wrong, or if you've got a problem with the question, 99% of the time it's because of one of these 4 things. So if you get these 4 things right, focus on your timing, focus on the case study, know your structures and know your knowledge, then you'll be in a really, really good place. Those are the kind of keys to success. So let's have a look at topics in previous years. This covers themes 2 and 3. There's loads of finance in theme 2, and there's quite a few financial tools in theme 3 as well, so there's quite a lot of links between these. But theme 2 is mainly about finance and operations and a bit of external influences. Theme 3 is all about business strategy and what causes strategy to be certain ways and what kind of influences decisions that businesses make. This is what's come up in previous years. So up to 2024, I've gone through each of the papers and I've kind of put a note there. If it's a number 2, it means that it's come up on paper 2. Obviously, some topics can come up from theme 2 in paper 3, so you see those annotated. What am I looking at and noticing there? You'll notice there's nothing in sales revenue and costs. That's because that's just a kind of introduction topic to profitability and liquidity that we see later on. Profitability and liquidity has come up a bunch actually in recent years. So we've seen lots of different calculations and profitability sections. We've seen quite a lot of liquidity in recent years as well. Looking at things we haven't seen for a while, we haven't seen anything on business plans or cash flow forecasts for the last 2 years. We saw some source of finance last year, but not the 2 years before that. And if by pattern wise, it seems like it's coming up for 2 years and then not for a year. So maybe you'll see something on that. We haven't had much on business failure for a while. We haven't had anything on quality for quite a while. So I wouldn't be surprised if we see anything on quality this year. So that could be quality control. That could be, the different quality systems in place, quality assurance or total quality management. And the competitive environment we've not seen for a while. We've seen legislation and the economic influences, but not last year. So there's a few things that potentially haven't come up for a while that might be worth a look. Of course, as you can see, there's plenty of instances where things have come up on several years in a row. So definitely don't look at the stuff that came up last year and think, well, that came up last year, so it won't come up this year. That's not really how it works. That's why it's daft to make predictions. That's why I don't typically make predictions. But it is definitely worth looking at this stuff. But you want to make sure you revise the whole thing. For theme 3 is quite big. I would be looking in particular at some things that have come up every single year. So 3.1.2, theories of corporate strategy, Ansof's matrix, Porter generic strategies. One of those has come up every single year. So something like that, I would be very surprised if it didn't come up. It's such an important topic. In terms of other things, we've seen quite a bit of external influences recently. We haven't seen anything on organic growth for a few years, so maybe we'll see something on organic growth. We haven't seen a decision tree or a critical path analysis diagram for the last 3 or 4 years. We've seen investment appraisal, but not in the last 2 years. So I'm definitely thinking that 3.3 is definitely worth paying a bit of attention to. There's quite a few things that haven't come up there that could. In terms of corporate influences, there's nothing in there because that usually links to corporate objectives. They kind of dovetail quite nicely. Culture's come up recently. Ethics has come up quite a bit recently. Ratio analysis comes up quite frequently, and some human resource calculations we've seen recently as well. 3.6, change. I'll talk about that later on. There's not necessarily like specific questions you'd see from that one really, because change affects the entire unit. So when we do the links between themes 3 and themes 2, you'll see a load of change mentioned. So although you might not see necessarily a question on it specifically, it is coming up a lot. Scenario planning specifically did come up last year. In terms of calculations that have come up, so first things worth bearing in mind here is that some calculations appear both in theme 2 and 3. So 2.3's profitability and liquidity calculations. Technically, in ratio analysis, we just add 2. We just add the ROS and the liquidity, in the gearing ratio. I teach them both twice, so I've included the profit margins and the liquidity ratios in ratio analysis. Sales forecasting appears in quantitative sales forecasting. The difference is in 2.2.1, you don't do the calculations. In 3.3.1, you do. But the topics are similar. And some of the 2.4 calculations on measure and staff can also appear in 2.5.3 human resources. So you've got a whole table there. Now I've got a video for theme 2 and theme 3 calculations. I will use the magic of YouTube to, once I've uploaded those, I'll have uploaded them probably by the time you're watching this, but I think I'm uploading this one first, and then I'll upload the other ones on Thursday morning. I'll add little cards in, so you can click those, and I'll add them into the description as well. But I'm not going to touch too much on calculations other than these 2 little bits, because I've got those videos for that instead. In terms of what's come up in previous years. Here's the list. So it's definitely worth having a look at this. We've got asset test ratio, critical path analysis, margin of safety, average rate of returns come up once. Decision trees in 2020, but not since. We've seen some profit margins over the last few years. Definitely worth making sure you can do all of those and have a look at some of those questions as well. Key topics. Here's a list of the spec. I've highlighted a few things really. Things that I think are a little bit maybe more complex that are worth having a look at. And I've highlighted 3.1.2 just because it comes up every year, so you need to make sure you know that one. 3.6 as well, as I'm going to discuss later. It has so many links to so many different parts of the course. It's definitely worth just making sure you're clued up on change and understanding what change involves. Most of the key terms for 3.6 are in 3.6.3. But that doesn't mean the first two aren't important as well, but definitely worth having a look at those. Obviously, it goes without saying, when you're approaching paper 2, you really need to know all your kind of key terms. So it's a bit daft to highlight any here, but I thought I'd pick out a couple that are maybe worth having a particular look at. So let's have a look at links between theme 2 and theme 3. So these are the things that we're going to look at. We're going to look at finance, profitability and liquidity, external influences, strategic theories, because I said they come up every single year, so we want to go through those. And I mentioned change is a running theme throughout this entire unit as well, so we're going to look at that too. So let's start with raising finance. So use of finance. What do we use our finance for? We use our finance, obviously finance is a theme 2 topic, sources of finance is 2.1.1 and 2.1.2. We use it for growth. And if we think about growth, really what we're thinking about is organic growth and inorganic growth, mergers and takeovers. We need money for these things. So we need to consider the business's cash position. We need to consider how much levels of debt they've got, which can link to our gearing ratio. We need to link it to the types of ownership and whether there's shareholder pressure as well. So thinking about shareholders, which is in 3.4.3. Organic growth is where a business grows through its own actions, such as opening new stores or creating new product lines. Inorganic growth is where a business grows through a merger or a takeover with another business. I'll hide myself so you can see those key terms there. So that's organic growth and inorganic growth. So let's think about how we use this finance. Loan capital. We've got to think about how much loan capital the business already has. So when we think about this finance, we're thinking about our capital employed, which is the total finance used by the business with the aim of making a profit. And this comes from two different categories. We've got our internal finance from within, so share capital or retained profit, the total equity of the business. And we've got the external finance, which is the money from outside the business, so long-term borrowing and non-current liabilities. If we add those together, so total equity plus non-current liabilities, that gives us our capital employed, and we need that for a couple of our financial calculations. It impacts on our return on capital employed, and it impacts on our gearing ratio. So ROCE is operating profits divided by capital employed times by 100. Gearing is non-current liabilities divided by capital employed times by 100. Again, I touch on these in more depth in the 3.5 recap video and in the theme 3 calculations video. But really, really important, because obviously how we get our finance determines how much a business is able to use it. Profitability and liquidity comes up in theme 2 in 2.3 and in theme 3.5 when we look at our ratio analysis. Profitability. Why is this important? Well, profitability is the main measure of how successful a strategy has been, and it will determine how well any strategy has gone. It's important for our shareholders because that's how we pay them dividends as a percentage of our profits, but also it's important as a source of finance because that can allow for our reinvestment in the future, our retained profit. Our liquidity is also really important. This is our cash position. So this will determine whether the business is able to make certain decisions. Do they have cash, or will they require external finance in order to fund kind of investments? So the cash position is really important as well as the profitability. And this kind of links to our working capital, which is our current assets minus our current liabilities. Really important that you understand what our working capital is. Came up a couple of years in a row because I think the exam board weren't happy with how it was answered, the questions on working capital, so they put it in a few times. Your working capital is just your day-to-day finance available, your current assets minus your current liabilities, your short-term cash and your short-term debts. Now, in terms of these, we also have these tables. Again, I'm just going to run through these quite quickly just because I've done this in the calculations video, but we've got a whole bunch of calculations we can do. We've got our profit margins. So these are our gross profit margin, operating profit margin, net profit margin. We've got ROCE as well. And we've obviously got capital employed, which we need to calculate ROCE. We've also got our liquidity ratios, current ratio and asset test ratio, and we've got our gearing ratio. So if you want to get a practice of these, pause this and give these a try using the tables on your page, on your screen. Work them all out, and then when you press replay, replay. We don't press replay. This is YouTube. Press play, and you'll be able to see the answers. So these are the answers. Hopefully you got them right. Gross profit margin is 50%. Operating profit margin 17.57. Net profit margin 8.78. ROAS is 13.27. Current ratio is 3.4. Asset test ratio is 2.33, and gearing ratio is 24.49. These figures kind of really mean nothing because I've just made them up for the sake of these practice calculations, but the doing the calculations will definitely help. Another really important part of this is our external influences. The economy, which is in 2.5, will affect the level of risk a business is willing or able to take. And if we think about Porter's generic strategies, which is 3.1.2, and his theory of competitive advantage, businesses that either operate, ideally, according to Porter, as a low-cost producer or a high differentiation business. Low-cost producers keep costs low to try and keep prices low. High differentiation, they offer a higher level of quality with unique selling points and various things like that. So in an economy that is growing, where consumer income is growing and consumer confidence is high, you might see more spending on high differentiation products and less on low-cost producers. On the other hand, if we've got high levels of unemployment and we are seeing people look to try and save money or higher interest rates or all sorts of different things, we might see more demand for low-cost producers. So we can link the economy to which businesses we think might do better and which businesses might struggle. So there's a link between theme 2 and theme 3 straight away. The competitive environment is also really important, and we're going to link this to the last topic of 3.1, which is 3.1.4, which is Porter's 5 forces. So the state of the market, we'll also have to consider how competitive the market is. The size, the stature, the actions of competitors, the level of growth in the market, the external threats to the market. Think about Porter's 5 forces. How much rivalry is there amongst those competitors? How much bargaining power do the suppliers have and the buyers have? How much threat is there that a new business can enter the market? Like, is it cheap and easy to enter? I always use the example of a coffee shop. It's pretty straightforward. You just find a premises, get a coffee machine, get a couple of licenses, and you're good to go. Whereas the market for like building something really expensive or with a really high level of technical expertise is going to be much, much harder. So there's less threat of new entrants. So the businesses in the market are a bit more secure. Are there substitutes that consumers can use instead of that product, in which case it's going to be more difficult to compete because you know that your customers have got a bit of power there. So Porter's 5 forces is a really important one. Just make sure you know the 5 forces and what each of them mean. Let's start with Porter's generic strategies. So we have Porter's generic strategy I've just touched on, low cost or differentiation. The only differentiation here between that and this is that we're also now focused on whether it's mass and niche market. If it's mass market, it's going to be low cost of differentiation. If it's a niche market, it's just the same but focused. Now, some of these are more common than others. We see quite a lot of mass low cost because you might need to produce at a mass market with high output in order to benefit from economies of scale to allow the low costs. We also see a lot of mass market differentiation. We see quite a lot of focused differentiation. So if you think about like a high income clothes shop for women in like a kind of affluent village, that's an example of a focused niche market. It's not targeting the whole section of the market, and it's really focused. You know, it's in a location that might be suitable for that kind of demographic, that level of income. We don't see as much focused low cost because, as you can imagine, when you're doing a niche market product, it's quite difficult to, with lower quantities of sales, get economies of scale and therefore reduce your unit cost. So we don't see as much focused low cost. We see definitely a lot more mass low cost and maybe quite a bit more focused differentiation. The Boston matrix, so market share and market growth. If it's high and high, we've got star products. These are the ones we want because they've got a high share, so they're going to get quite a lot of the revenue from that market, but they also have high growth potential. The problem child or question mark products, they are in the high growth market, but they don't have the market share. So they're competing with the stars, which is a bit of an issue, but they potentially, if we can build the market share, could become stars in the future. So we might want to invest quite a lot in these businesses, these products, to try and help them develop into stars if we can. The cash cows, they are high share but in a low growth market. A business is just going to try and milk the cash cow, really try and get the cash. The market's not growing, probably less threat of new competitors because of the fact that the market's not growing. So these businesses with a high share, they're just going to remind consumers that they exist and try and generate a bit of money. And then the dog products, which is quite a sad one because I don't know if this is why they're called dog products, but there is, I guess, like if a dog product's making a profit, keep it going, but you're not going to invest in it. And I guess if it serves its purpose, if it stops making a profit, you put the dog down. I don't know if that's why it's called dog product, but quite sad, especially obviously for myself because we had to put our family dog down a few months ago. So always makes me feel a bit sad when we do the Boston Matrix. But I guess that's maybe that's why it's called. Maybe that's not. Maybe there's a perfectly valid other reason that it's called a dog product. But the key thing is that if they're still making a profit, keep them going. But you're not going to invest heavily in them. And sometimes it's just you just need to know when you need to let these products go. It's probably a nicer way of phrasing that, actually, isn't it? The last one for these three is Ansos's Matrix. That, in my opinion, this is the most important theory in the entire course, which is why I've left it until right towards the end of the video, just to make sure that you're watching the whole thing. We've got a bunch of different strategies here based on whether we are launching an existing product or a new product to an existing market or a new market. So the idea here is that the further away we go from our existing and current products and markets, the more risky it gets. So market penetration is anything we do to just try and build market share in an existing market. Product development is launching a new product to customers we already sell to, so like a new version of a product, for example, updated features. Think about the PlayStation 5 compared to the PlayStation 4, etc. Market development, when we take an existing product into a new market. Most often, this is different countries, but it could be if you find an existing product and you find a repurposed version of it, so a repurposed way of using it. So like, for example, surface wipes got repurposed massively into COVID, so instead of just selling them to people who were cleaning domestically, you could sell them to businesses and any kind of like establishment. Same goes with hand sanitizer and things like that, and face masks, which were targeted at different markets because of those opportunities. The last one is diversification. This is something completely new. New product, new market. And loads of businesses have taken risks here and they've become really successful. So like Apple, for example, weren't a phone company until 2007. That was diversification, a new product for them, in a new market for them. And it ended up being their biggest product ever. And it turned them into the kind of big, huge company that we know now. They were big before, but they're much, much bigger now. So diversification has the highest risk, maybe potentially has the highest level of reward as well. So sometimes you see a question that's really clearly about Ansos's Matrix. Sometimes you see a question about a business launching a new product or a new market, and it doesn't say Ansos's Matrix, but it is. And using Ansos's Matrix is really, really beneficial to help you get good marks on that answer, especially for like a 20 marker. They love a 20 marker on that. Lastly, but definitely not least, an overriding topic in Theme 3, change can occur and does occur for a variety of reasons. Growth, internal, external, is going to lead to changes. We've got leadership changes if we've got a new owner going in a new strategic direction. Culture changes when businesses change. Because of growth, because of leadership, culture can change. We've got ethical perspectives changing. So a business might become more ethical or less ethical depending on, a whole bunch of different things, including their leadership and their culture. We've got market changes, actions of competitors, new technology, Porter's 5 forces. Any of these things can lead to the market changing. Change basically occurs in pretty much any area of business. So although you might not get a question about a specific key term from change, just be aware that there's going to be a bunch of questions on change in a bunch of different ways. So that covers paper 2, theme 2 and theme 3. Have a look at the other resources in the description. If you've got any questions, give me a shout. Hopefully you found paper 1 good. The feedback I heard from it was that it was pretty accessible. Key terms were okay. Calculations were okay. I haven't been able to see it yet, but from what I've heard, it's been decent. Hopefully paper 2 is in the same way. Maybe you just found it okay because you were really, really well prepared. And hopefully this video helps you do that. Have a look at the other resources on the channel. If you've got any questions, give me a shout. And I will see you for paper 3. Paper 3 might take a little bit longer to record because there's a lot more research involved. But there definitely will be a paper 3 video. And I'm expecting it'll be ready for half term, if not sooner. I'll see you then.